Hi folks, in this question we have a fair value through OCI investment that one company has in the shares of one other company. So what we have to do here is we have to make some journal entries to adjust the investment, the loan investment in the portfolio to fair value, and we're also going to do some statement presentations. So let's begin. Now in this particular question, the company has an investment in Fahad Corp shares, and what we find is that the cost of the portfolio of that investment was $39,900, but the fair value at the end of December 2014 was $41,750. So we can see that the investment's gone up by $1,850 if we do the math. So a way you can get it is just to compare the cost with the fair value at the end of 2014. We can see it's gone up, so we'll debit the fair value through OCI investment and credit the unrealized gain or loss that'll go through OCI on this investment for $1,850. Now what we need to do is we need to compare the value of the investment at the end of 2015, okay, with we have to compare it with the carrying value. So now we know that the carrying value of the investment is now $41,750 because we adjusted it from $39,900 to $41,750. However, the fair value is $32,200. So the difference between $32,200, okay, I'll just copy that, make sure you can see that. The difference between that $32,200, guess I'll do it this way, it might make more sense, and the opening amount of that investment, well, it's not going to let me do it. I'll do it this way, $41,750, right? Less $32,200 is going to give us $9,550 adjustment. So again, your investment opened 2015 at this value and closed 2015 at that value. So the fact of the matter is it went down, so we're going to credit the investment by $9,550. Now the investment has gone from $32,200 to $36,400. So it's actually gone up. Its ending value is $36,400, and we had it sitting at the end of last year at $32,200, so it's actually gone up now by $4,200. So we're going to debit the investment for $4,200 and credit the unrealized gain or loss in OCI for $4,200. So that's part A. Part B said, determine the balance in the AOCI income or the AOCI account on the statement of financial position on each of December 31st, 2014, 15, and 16. Well, one rule that we've learned is that at any point in time, the AOCI balance, don't forget the AOCI is accumulating all of those cumulative holding gains and losses on the investment. So if we want to know the balance in AOCI at any point in time, we have to look at what is cumulatively sitting there that hasn't been released either through retained earnings if it's without recycling or through net income if it's with recycling. So any cumulative unrealized holding gains and losses. So we can look at the cost of the investment, right, which was $39,900, and what is it now? Well, now if we look at the investment, it's sitting, okay, at its value. The value it's sitting at is $36,400. So this was the cost. So this was the original cost of the investment, right? And this is the fair value, December 31st, 2016, right? Which is where we're at right now. So the AOCI balance at any point in time, okay, is the difference between the original cost and the balance in the account that you want to find it at. So if I was looking at this, I would say, well, the difference between the cost and the balance at the end of 2016, the difference is $4,200 or $3,500, right? So my AOCI balance at the end of 2016 should be $3,500, right? Now, what if I wanted that balance at the end of 2015? Well, my original cost was $39,900, and my fair value at the end of 2015 was what? $32,200, right? So now the difference between that amount of my original cost, which is $3,900, and the $32,200, which is the fair value at the date that I want my AOCI balance, which is the end of 2015, that's going to give me $7,700. And notice, just as at the end of 2016, at the end of 2015, I got a bracket. It's a loss. It's an AOCI debit. Why? Because the fair value is less than the original cost. Now at the end of 2014, take my original cost, subtract from it the actual fair value, which is $41,750. So therefore, if I compare my fair value, which is higher than cost, now I know I have an unrealized, a cumulative unrealized holding gain in the account at that point of $1,850. That's the difference between my original cost and the higher value that it sits at now, which is $41,750. So again, you can use this rule, okay, that at any point in time, the AOCI balance is the fair value of the investment at the date for which you're trying to find AOCI and the original cost of the investment. Okay, so you can use that rule if you want. But I just did a little bit of math up here so you could see it. If you don't like that method, don't use it. Use a D account. We already determined here that at the end of the first year that we had the portfolio, our unrealized gain or loss going into OCI was $1,850. We didn't have an opening balance. It started at zero. If we had one, we'd have been given that balance or given numbers to calculate it. There was nothing. So now at the end of 2014, we have $1,850 in it. Again, the difference between the original cost of $39,900 and the fair value of $41,750. So that gives me $1,850 right from the start. Now, how much did I put in it in 2015? Well, go up here. I dumped a debit into it of $95.50. So I booked an unrealized holding gain or loss debit, which is a loss. So I debited the AOCI for $95.50. That gives me $7,700, which is the same number I calculated here when I took the difference between the original cost and the fair value at the end of December 2015. In 2016, what did I do? Well, I dumped, because it went from $32,200, which was the fair value at the end of 2015, to $36,400, which was the fair value at the end of 2016. I booked an unrealized gain or loss credit because it went up, $4,200. So I would just dump that in there. AOCI account, because again, if it goes into OCI, it affects AOCI. Remember, like income is to retained earnings, OCI is to AOCI. So therefore, it increases it from the negative or the debit balance of $7,700. If I add a credit balance of $42,000 or a credit amount of $4,200, I'm going to get a net debit of $3,500, which is what I had here. So a couple of different ways you can do it, whatever suits you. Okay, now the question in part C, they told me here, now I sold the investment. On February the 13th, 2017, I sold my investment in Fahad for $38,000, and they want me to make the journal entry assuming that I used with recycling and without recycling. So what would I do? Well, first of all, step 1 and step 2, the first two entries aren't going to change. It's the third entry that changes, because if I assume whether it's with or without recycling, let's do the first two steps first. If it's regardless if it's with or without recycling, first thing I got to do is update my investment to the fair value at this date of sale, and I know it's $38,000. I already know from the question at the end of 2016, it's sitting at $36,400. If you don't like my chart, look at the problem. It gives it to you. Fair value December 31st, 2016. $36,400. You sold it for $38,000. That must have been the fair value, the market price at that date. So that's an $1,600 difference. So you're going to debit the investment to bring it from $36,400 to $38,000. You're going to debit it to increase it, and credit the holding gain or loss going through OCI of $1,600 to bring it up there. So now it's sitting at $38,000, which is what you paid for it. So take your cash and dump your investment. That's your second entry. You're going to sell the investment. So now you've got rid of the investment. Now that you've gotten rid of the investment, you have to determine, based on whether I'm using with or without recycling, how is this entry going to look? So again, this is the only step 3, that will look different depending on whether you're using with or without recycling. If we're using with recycling, it means that the unrealized gain and losses cumulatively on this investment are going to be recycled through net income. So I now know that I have a net loss to recycle through on the sale of Fahad. How do I know that? Well, first of all, again, I know that I sold it for $38,000, and I know that my original cost was $39,900. So I already know that I've got a loss on it because I paid $39,900 for it, and I sold it for $38,000. So that's my cumulative unrealized amount, right? So now, I think I got this wrong here. Should be a loss. Probably confused you a bit. Sorry about that. So now I know that since I paid $39,900 and I sold it for $38,000, I got a loss. So I have to recycle or credit that unrealized gain or loss to get rid of that unrealized gain or loss debit for $1,900. So I got to zero it out and throw it into the income statement as a realized loss. If you don't like comparing what you paid for it with the fair value at the date you sold it, you don't have to do it that way. Track it through a T account. I know that cumulatively the unrealized holding gain or loss account was holding $1,850 unrealized gain or loss from 2014, right? I know in 2015 I debited that account for $95.50. So here it is right here. $95.50. And I know that in 2016 I credited that account for $4,200, and I also know that when I updated the investment in Fahad that I sold, I credited it for $1,600 to bring it up to its fair value at the date of sale. Remember, I did that in step 1. It's right here. So I already know that I have an unrealized gain or loss debit that I processed at one time of $95.50, and the total credits for all these 3 periods were $76.50. So at net, I know I was holding cumulatively an unrealized gain or loss debit in OCI related to the Fahad investment of $1,900. This is what I got to clear out. I got to zero it out. Right? So I got to zero it out. So to get this account to be zero, I need to process a credit to this unrealized gain or loss account, right? So this is the credit I'm processing. So once I make this entry and post it, see if it'll let me do it. Well, it's going to give me this, but I don't care. Okay, if I post this $1,900 credit that I got up here, so let me just do a little arrow stuff for you. All right, process that. What's my ending balance here? It's El Zippo. It's nothing, right? So now I got a zero balance. Ooh, didn't want to do that. So now I got a zero balance, which is what I wanted, because now it's sitting in the loss account. It's sitting in the income statement as a loss. Okay, now, what if the question said you're not going to do it with recycling, you're going to do it without recycling, which means what? Whoop, something got lost here. If I did it without recycling, it means I've got it, instead of debiting the loss account, I'm just going to debit retained earnings. So if you have a look at it, sorry folks, I just paused it there so I could bring this page back up. So if you look at the question, when you did it with recycling, you credited the unrealized gain or loss so that you could move this $1,900 loss into the netting, into your income calculation, into your income statement, right? That's what we did down here. Well, the only thing is, instead of debiting the loss, you would debit retained earnings because it's without recycling. So that's your journal entry. Okay, so this concludes this short segment on making the journal entries to adjust fair value through OCI investments to fair value and to process or to recycle unrealized gains or losses through to net income and to reclassify them through retained earnings depending on whether it's with or without recycling. In the next little segment, what we're going to do, you can probably imagine, we're going to look at what the financial statement amounts might be for 2016 and 17. So just stay tuned.